The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, tomorrow, let's reconnect here. On Wednesday, I'm going to have a special guest. My best friend, Byron Tucker, is going to be my guest. I met Byron in 1982 in April. I had just gone back to, actually February. April the 16th is when the S&P started trading in 1982. But I met him in February. I'd been on the floor about 3 or 4 days, and I was standing at the top of the T-bill pit because that was the biggest and most actively traded thing in 82. You know, S&P didn't start trading until April the 16th. And didn't become popular for 6 or 7 months. But I was standing at the top of the T-bill pit, and I looked down, and I looked over at the Goldman Sachs desk, which was right off the pit because it was one of the major players. And this fellow was standing there in a 3-piece Brooks Brothers suit, wearing galoshes and a really cool fedora hat and a cashmere coat, and he had came in and he was running late. He had all kinds of little girls, young girls, runners working for him and everything. And I just started laughing because he was wearing these galoshes, these old rubber boots, because it was snowing outside. It was February, and I was laughing really hard. And I never paid too much attention, but one of the runners came up to me and said, you know, my boss is a little upset. And I said, who's your boss? She said, Byron Tucker. He runs the Goldman Sachs desk. And I says, why is he upset? He says, because you're laughing at him. I said, well, I'm not laughing at him. I said, I was laughing at the fact that he's wearing these, galoshes, with all his fancy clothes. And she says, well, he doesn't want to get his alligator shoes wet. Anyway, I started to laugh. And about 20 minutes later, he came over. And we talked, and that was it. We became best friends over the years. We've traveled everywhere around the globe. About 2 weeks later, he was in California visiting the family and taking the old Harley through Mulholland Drive, and we did all that kind of stuff. But he's going to talk with me on Wednesday. It's going to be a couple old traders reminiscing some really funny things that happened during the trading times at the Merc. He worked for Leo Malamed. He ran the desk for Goldman Sachs for I think 3 or 4 years there. Then before that, he was working with Leo Malamed to help establish the currency pits. That was in 70, 71. He now is in New York. He has he's married to a woman who has a very large buy-sell program, long short fund, handles a couple $2 billion, and then he's on the board of a bunch of board of directors. But a really nice guy. You're going to love some of the stories. He happened to be visiting me here in Tucson over the weekend, and he lives in Scottsdale part of the time, and we were chatting about it. So I said, why don't you come on the show and we'll talk about some of these funny things that happened, because some of them were just they're just absolutely hilarious, some of the stories that you can imagine. And he'll tell us a few trading tips too, because he's a very active trader still. We have a jewelry show here in Tucson every year. Starting in February. It lasts for about 10 days. And it's the largest jewelry show in the world. We have 40,000 dealers come here each year. And fortunately, about 20 years ago, I met one of these gentlemen, and he's been staying with us every year for 2 weeks for the past 18 years. And we have a good idea of, what's happening and everything. But his business was down quite a bit. Over the past years. It was down 50% from last year. He's never had a downturn like that. The worst one he ever had was in 2009. Business was off about 20%. And he handles, low-end jewelry, costume jewelry that you find in the boutiques and at airports and stuff like that, things that run somewhere between, $30 is about a maximum price for retail on any of these things, but business was way down. Whether that's indicative of anything else in the economy or not, I don't know. It was just very unusual the fact is that we really had a big downturn for him, and this is very unusual. We have a lot of years to base this on, so it was quite interesting. Okay, let's go take a look here at the first chart that I've posted in here, which is the New York Stock Exchange Index. I don't want to go through how many times I've talked about why this is the most important index, because it's so widely talked about, by me anyway, but it's a good indicator. Several thousand stocks are the most active stocks, the highest liquid stocks, and if you'll see from this chart, you'll see a perfect A, B, C, D pattern form over the past month. This is Gartly's favorite pattern. I named it after Gartly. It was on page 222 of Gartly's book. It's when you have an ABCD pattern coming in at a lower top. This one's even more important because this is the third lower top. We had the second lower top occur just a few just about a month or so ago, right around Christmas time, and then we had the ultimate top that occurred way back right around Thanksgiving. But folks, if you take a look at this chart really closely, you'll notice that stocks have been going down since July. The overall market has been going down since July. Now, the 531 stocks in the Dow Jones, the S&P, and the NASDAQ, there's 30 Dow stocks, 500 stocks in the S&P, and then the NASDAQ stocks, but some of the NASDAQ stocks are double counted in the S&P. There's only 531 stocks that people really talk about on CNBC, and Bloomberg and all the other places, but that's not the real market. So that's really what we're looking at here, is these stocks that started to turn down. Now, this is a perfect signal, folks. This is a sell signal that you cannot, well, you can if you like, but it did everything you could possibly ask for. It made the D point and then closed lower on the day. As long as we don't get above Friday's high, this signal is spot on. If we get above Friday's high, something's wrong, and this market could go a lot higher. And, you have to keep that in mind, that sometimes these things really don't do what you want them to do, because it's all probabilities. It's never certainty. Now, one of the reasons why you have to be really skeptical here, and if you'll give me a second, I want to blow this up so we can see it a lot better. And it's about the ratios of the new highs to new lows that we've been seeing. And if you just take a look at these levels between new highs and new lows in the NYSE, you'll see the readings over the last 5 days. We had some tremendous readings of 8 to 1, 7 or 8 to 1 during Monday and Tuesday. Wednesday, we were 3 to 1. And then when we got into Thursday, we were, really slowing down quite a bit. And then Friday, we had a 50. There was 50% more up moves, and there were new highs than there were new lows. Those are really powerful figures, folks. The thing is that the momentum of those over the 5 days was dropping, but you have to respect a market that can do that. So if this market fails, that could be, the reason, why you're looking at it. Now we have what is her name? She's the prime minister. She's the queen of Germany. What is Andrea Merkel's title? She's a chancellor. I don't even know what her title is. That's not very smart of me, is it? Oh, I can't remember what they call her, but she must be the queen of Germany. Yeah, she must be the queen of Germany. That's what she's got to be. The prime minister. There you go. See, I knew something like that. Okay, we're going to take a look at the DAX here over the last 6 months, and you'll see that it's completed a huge ABCD pattern. And the D was exactly at the exact price at 10,986. That was the exact high in the DAX, 10,986. The time from October through December was exactly equal to the time that we had from December through February. So this has completed, a very perfect ABCD pattern, and the DAX is one of the more weaker indices today, and of course it was Friday also. But this looks like it's made some type of a major top on this ABCD formation, and this is one of the patterns that we rely on the most. It was on page 249 in his book. Profits in the Stock Market by H.M. Gartly. So we'll keep an eye on what the DAX is going to be doing. Those of you folks that trade in the middle of the night, the DAX is actually a pretty good trading vehicle. It follows the numbers very, very nicely, and that's what you'd like to see. Now, I'd like to switch over here to the Dow Jones Utilities, because we had something unusual happen last week after we made the big ABCD pattern in the utilities. You'll see that we've had a really big drop in utilities, about 7% in a matter of a week, when the market was almost trying to make new highs, which it couldn't do. This could be a divergence, but we have completed some major ABCD patterns in the Dow Jones for sure. And then we also have a situation in the Dow Jones Transportations, where we've had a whole series of lower highs. Going back to right around Thanksgiving. We had another one right around the first of the year, another one right around that January 22nd date, and then we had another one Friday. And this is basically what we're looking at these particular spots right here. So I'm having a little bit of a small problem here, folks. Bear with me for 1 second. Got tied up in this. Oh, brother. I got the cord to this. Oh, dear, I'm in big trouble here. I'm going to have to try to fake this for the break. What I did was I moved my chair. I've got an Aeron chair, and I moved my chair just a little bit to the right in order to catch this chart a little bit better. And when I did, the cord wrapped around the wheel, and that has tied me up. I'm in a James Bond contour position, trying to bluff my way through the last few charts here. So let's go to the next one here that I wanted to look at, which is the banking index. We hit a perfect retracement in the banking index on Friday. It was right at the 61% retracement of the of the last down move. That's also made that a Gartly pattern. And so the banking index is, one of the weaker ones, and it certainly looks like we're getting ready to go lower in the banking index. If you have any questions, it's 877-927-6648. I'll be happy to answer any question that you have, and if I don't have the answer, I will make one up. One person has asked me a question about the crude oil. I believe crude oil is certainly going higher. I believe we got at least another 10% to go, somewhere between $60 and $65 is what I think we're going to go. The first level is 58. That's 10% higher than where we are right now, and that's what I'm looking at. So we'll take a little break here, pay a few bills, and we'll be right back after this message. Dow's off about 80. And gold is rallying a bit.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, have one other announcement to make, and that is Thursday will be my last show for 2 weeks. I'm going to take the last several weeks of February off for some well-needed R&R. I did too much traveling in October, November, and December. Sarah and I went over 44,000 miles, seeing people and talking, giving speeches and stuff, and that was just too much for me. I've not really bounced back well from that. I can always tell when I'm got overtired, I slur my words, which is not unusual, but it's even worse this time. But I am going to be taking a break from the radio show, but I'll be back hopefully, right around the 1st of March, and we'll see. We're going to California to visit some friends that we've had for a very long time, and also my grandson and my daughter. So that'll what I'll be doing. Now, what I wanted to do is I want to talk a little bit about the Dow Jones. The Dow Jones is the Dow Jones Company. I hope you guys understand that's what it is. They have an index that they call the Dow Jones Industrial Average. They have the transportation, utilities, and a whole bunch of others, but it's basically a publication company, and it's a rating service too. And so this is the one that became popular back in the 1890s, and it's stuck with us through all this time. So I wanted to talk to you just about how the index is derived. It's basically a price-weighted index. In other words, the higher the price of the stock in the Dow, the greater the weighting. It doesn't make any difference how many shares are outstanding. It's not capitalization weighting, it's price weighted. So what I want to do is I want to show you how it can be influencing about what you're seeing. The first chart is Disney, and as you can see, Disney had a 12% run last week. It puts a lot of points onto the Dow, even though it's it's very high price because it's triple digits. There's not a lot of triple digit stocks in the Dow, but that happens to be one. Now, if we take the most expensive stock in the Dow, which is Visa, and we take a look at it, we're going to see that Visa is forming that pattern known as the 5-wave expanding triangle pattern. You see waves 1, 2, 3, 4, and 5. And not only that, but what wave 5 did is it made the higher high on Friday and then closed lower in the lower part of the range. Now, I haven't checked the price today, but my guess is that Visa is probably lower today, but I don't know if that's correct or not. That's just my assumption of what should happen. Now, if we take another one of the Dow stocks and take a look at it, and it's I think it's the second, it is the second highest price in the stock, and that's our good friend Lloyd Blankfein from Goldman Sachs and Sons, and Hank Paulson and all the other people that have worked there through the years. Actually, my friend Byron, who's going to be my guest on Wednesday, he actually worked at Goldman Sachs, and his partner on the desk that he worked with was none other than Senator John Corzine. So he knew Corzine when he just started at the same time that Byron did back in the late 60s, early 70s. But if you look at Goldman Sachs here, trading at 183 a share, it's come down quite a bit. It didn't get back nearly as much, and it's formed a really nice head and shoulders pattern where the left shoulder is higher than the right shoulder, which you'd like to see, and so this stock should be heading down. We also completed the major ABCD pattern up here at around $199 a share in Goldman Sachs. That's just another indication that the market for Goldman Sachs, should be, starting down. So those are just a few of them that we're looking at. Now, the last one I wanted to look at, which is the very expensive one, of course, and it's doing the exact opposite of what the market is doing, and that is International Business Machines, IBM. And as you can see, we've been in a down move in this since 2013 when it topped at 217. We're now trading in the 150s. We've had lower tops all the way through here. We gapped below the triple bottom when it was 173 a share. That was some type of really bad news, and the market has just continued to go down, ever since that. That gap will probably be filled someday, but when, I'm not sure. Probably not during my lifetime, but who knows? That's what we're watching anyway with the IBM, to take a look at that. Now we want to. Yes, Goldman Sachs could be setting up for a little Gartly, but you've got to give it a couple weeks. Right now, it's doing nothing. It's just making that head and shoulders pattern, in my opinion. In fact, it's a perfect one. You've got time symmetry and everything you could ask for with Goldman Sachs, if that's going to be the case. So we'll have to look at that. When we come back from the break here, one of the things that we want to do is to take a look at the gold market, because I really think we got a shot here. We got the Dow down about 42 points on the day. The S&P's down a couple, and gold's up $5.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we have one of our favorite people on the line from La Paz, Mexico, Priceline Charlie. Are you there, my friend?
Yes, I'm Larry. How are you?
I'm okay. What can we do for you today, or better yet, what can you do for us?
Well,
How are we standing with Priceline right now?
Well, we have to keep an eye on the earnings, which is going to be on the 19th of this month.
Well, I wouldn't trade it till then.
Well, I actually took your advice, and yes, on Friday, when it dropped real hard, I dropped 50%, took profits, and now I'm waiting it to climb, and it didn't disappoint me today. It's already moving higher than Friday.
Well, that's true. I think we've got a chance to at least go to 1095. You know, the way these earnings come out on a stock that's $1,000, you know, it could move 10% without any trouble. So I wouldn't touch it till after the earnings. But the areas to look at would be 1095 or 1094. It'd be one area, and also the $1,124 level. $1,124, that's almost $90 higher than it is now. That's 9%. So I would really, kind of look at that. This market's in a downtrend, but remember what happened to Amazon, Charlie, because, some of these things can really go crazy. So be real careful on February 15th, especially in a stock that's oversold like this one.
Mm-hmm. The date is February 19th.
February 19th. Okay, so that will be 16, 17. It'll be on next Thursday then.
Right. And
okay.
I agree. You mentioned 1090 before, and I agree with that date. That's a significant number, 1090. I'm just wondering, we just set a bottom on a couple of days ago, 1, 2, 3, 4, 5 days ago, where we got down to 1,012. What is the Fibonacci retracement numbers that we would be looking from 1,012?
Well, from 1,012, that number would come in at 1094, 1,094 per share.
And what is that number? What is that? A point what?
That's 0.618 of the whole move down from late December to the middle of January. To if it gets up there, that's exactly where it would be.
Perfect. That's what I was looking for. So we can expect a bounce to 1090. And frankly, I went into the last one when he bounced it so hard on November 1st. He had climbed so fast in 2 days in 2014 that I decided to take a very heavy position in the short, and it worked out well because the next day it fell.
It fell well over 15% in one day. That was a happy. Is that why you sent me the case of champagne, Charlie? I wondered why I got it from you. That must have been it.
Well, I tell you what, I'll send you $20 for mentioning that.
Well, just be careful.
Favorite, right?
Be careful with the earnings, my friend, because some of these stocks, especially a stock like Priceline, it's not. There's not a lot of public people in it. I mean, there's a lot of hedge funds and stock. Mutual funds, of course, but the public is certainly not in this stock, not at $1,000 a share. So just be really careful. It's been very good to you, and it is way oversold. So wait till you get a really strong rally, and then take a look at it again, in my opinion.
On Friday, the 6th, there was 1.2 million shares traded on Priceline, as it dropped real hard. I was surprised, so I said to myself, it's not mom and pop, it's got to be the big ones. Somebody big is selling, and somebody is picking it up and buying it. I mean,
boy, you figured this out. You figured this part out pretty good, Charlie. You've been listening to TFN a long time. So you're saying that every buyer has to have a seller. I think you got that down pat, my friend.
I learned it from you. Thank you. I get 10 on that. But, that kind of volume, I looked at it and I said, wow. And it's the same kind of volume there was on the 15th of January when we set that bottom. So there's somebody catching it and holding it. And I'm watching, and we're watching today. We've seen it go up. I'm just watching as we get near the 19th. If it's going to have the same plan of taking it up as fast as it can. But why does someone push it up as hard as they did in November, recognizing that all of a sudden it drops? Either they didn't have information, they took a gamble, and they lost quite a bit. That's the part that's in my head is not clear. Why does someone take that big a risk?
Well, there's one reason for it, and that is they have no skin in the game. It's other people's money. It could be a hedge fund, a mutual fund, and maybe the head trader is 23 years old and hasn't shaved yet. And that includes boys and girls. So you don't know. You don't know where that money's coming from, but usually it's a case of not having any skin in the game.
I see. Okay. By the way, I want to mention something. Remember, I buy concrete equipment?
Yes.
On Friday, there was an auction in Las Vegas. This is a special engineered concrete batch plant that mixes and creates wet concrete that's put into a pump and poured into the building. The machine must have cost over $150,000 to make. It's got an 8 cubic yard drum that alone costs more than $10,000. I bought the machine in the auction on Friday for $3,500.
Oh,
I was
goodness.
shocked. I mean, you
Wow.
mentioned how jewelry is dropping prices. There's just no demand for that type of equipment.
That's true. I wonder how many bodies you could put in a concrete machine like that in Las Vegas. Do you have any idea what the cubic feet would be for that?
More than 10.
And I imagine there have been some.
You can turn them into pulp at more than 10.
There's probably been some buildings built around that anyway, so who knows? It's really interesting to hear you talk about used equipment, because when the market is really strong for construction, used equipment really goes at a premium. And boy, you're saying that you're having huge discounts. Is this really on just specialty heavy equipment items that very few people use, Charlie?
No, I noticed that we bought concrete forms, for floors, and what I estimate was worth between 50 to 100, picked up for 9,500, which is a joke. These are quality, heavy duty, because you're supporting the floor. The steel in it, each piece should have cost $3,000 to $5,000.
Sure.
I put several floors, and in two batches. One was 9,500. And the other one was another, because I could buy the same price. There were two batches up. I bought both of them, spent $19,000, over $100,000 it cost whoever sold it. But Vegas seems to be a very weak area right now. Mm-hmm. I don't think all areas are the same are in the United States, but from construction, I'm seeing a very big weakness in the Vegas area. Hmm. So I thought I'd bring up to you how I see it. But, by the way, coming to concrete, you know how we have commodities like wheat, corn? Do we have anything commodities for concrete? Are there any places
I haven't seen a concrete. The only thing that comes close to me is coffee. You have to have rocks in your head to trade that anyway, so that would be the only one that I would think that would even come close to concrete would be coffee. And I don't like coffee, so... That's my only reasoning for that. I don't believe we have a concrete contract, but I could be wrong, because there's something like 220,000 different types of things that you can trade when you figure the different options and the spreads that you can do and everything. So it could be in there, Charlie, but I frankly don't know. There's some pretty smart people in the den, and so far no one's come back to tell me that there is a concrete contract or not, so I don't. I'll put it this way to you, Charlie. I can't give you a concrete answer.
Okay, I'll wait. Maybe somebody.
Hey, we have a question for you. One of our den folks wants to know how old you are.
I'm 67 years old. I was born in 1948.
And when's your birthday?
April 15th.
April 15th. It's coming. Oh, why'd you pick that day? That's only 2 days before Arch Crawford and also J.P. Morgan. They were born on April 17th. So we're going to have a big party when you sell all this stuff out with Priceline. So get ready to see a whole bunch of people coming down to Mexico to visit you.
Oh, I hope so. We're definitely going to build a lot of buildings if somebody want to buy an apartment, a condo. The prices, by the way, here are very reasonable. The prices are so reasonable compared to the United States. It's incredible. Waterview apartments sell for like $80,000, and that's really why I kind of like the idea of working here, because in the United States the real estate is so expensive. Here it's so reasonable. So it's it's an interesting situation. And I also like the weather this time of the year. What I'll do in July,
yeah, you think it's a little better than New Jersey? Is that what you're saying, Charlie?
Oh, yeah. Atlanta, New Jersey. I lived in New Jersey for many years. Now I moved to Atlanta. But, yes, it's much better here. It's sunny and we were 85 degrees yesterday.
Well, that's what we are here in Tucson today, so it's about the same, I guess.
Mm-hmm. Well, I tell you what, nice talking to you again. Thanks for the information.
Thank you. Let's get to. Well, I'm going to be gone for a little bit, so I won't be around during the Priceline earnings. So just prepare yourself for $10.95 a share. Okay.
Okay, I'm watching that number. Thank you.
Thank you for calling in, Charlie. Enjoy La Paz.
Thank you.
Okay, you bet. We got another Charlie calling in. Today's a Charlie Day from Massachusetts. Charlie, are you there?
Yes, I am. Can you hear me okay?
Perfectly, just like you were next door.
Love it. Thank you. Yeah, and we're about, I think, 17, 18 degrees perhaps, and we're getting hit up here in Massachusetts with
I'm watching it on the news, my friend.
It sucks. Pardon me. I guess you call it snow fatigue.
I could believe it.
Yep.
What can I help you with, my friend?
Well, there are two symbols here. One is UCO, which is oil long.
VCO or UCO?
UCO.
Just a second. I had the wrong thing on that. Just give me a second, and I will put the symbol in. I put it in as VCO, so we'll put this in here, and we'll get it correct. I hope I will anyway. I have one of my trading buddies used to play for the Boston Bruins and also played for the hockey team in 1980. Jack Hughes is in Boston, and I talk to him every day, and I get a weather report without too much trouble, so I know pretty much what's going on. The problem is getting rid of all the snow that you've got. That's the real problem. Now, UCO must be a ETF to go long crude oil, correct?
That is correct.
Okay, we'll take a look at it to see where we are here. What happened to my, oh dear, just give me 1 second here, Charlie. I've got to get these things back. Oh my goodness, I've lost the den. I don't have any way of posting this into the den, for heaven's sakes. What have I done wrong? Wow. It's amazing that anybody can even hear me.
Yeah, I can hear you.
Wow. I wonder if anybody, well, you have, everybody else must be able to too.
No. Yeah, I've got you on the computer, and I just heard you.
Okay. Well, that's good. Well, all I can tell you is I really think that the this stock has already gone up 30% in a matter of 8 days. So it must be double or triple leveraged. Is that what it is?
Yeah, I'm not sure if it's double. I think it's probably double.
Yeah, it's got to be double because the regular crude hasn't done that. We've got a really nice ABCD pattern in this stock, this UCO. That would take you to $11. That's up another 15% from where it is, and I'm thinking that we could easily get that in crude oil. It could, if it gets above $58 a barrel in crude, the next level would be $65 a barrel. It's amazing, Charlie. Just a short week ago, everybody's talking about $30 and $20 a barrel oil, and now just a few days later, they've all changed their minds. So it's anybody's guess. But my guess is this is going to go to about $11 a share, as near as I can tell. Now, the other one you wanted to talk about was TZA. Is that correct?
Yes.
Okay, give me a second here, and I'll see if I can. I think I have that one in my. Yeah, I do have that one in my portfolio. Someone has already asked me about that before, so give me a second here, and we will. Boy. Oh, only take a second. TZA. You've got another big storm coming too, don't you?
Yeah, Thursday, I understand.
Okay, now this one is a lot different. I don't know what this one is, but this one has just completed an ABCD pattern. Let me. There's a problem here. I see some data problems. Give me a second here. I've got to refresh the data because something is not right. Yeah, this is trading around $11.60 a share.
Yes.
Okay, we just made a big ABCD. I would be a buyer of this with a stop about 50 cents lower. I don't know what this stock is. It must be a
small caps.
Small caps. Okay.
Yep.
Well, it's a small buy in here with a 50-cent risk, my friend. So I hope that helps.
Thanks very much. Thanks.
Thank you, Charlie.
Yep. Bye-bye.
Wow, I can't believe it.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, we're back, and we're going to take a look here at the gold market, because I think we've got a potential for a really, really strong gold market if these numbers that we're looking at will hold. If you take a look at the gold here, we made a high up here at that 1308 a couple weeks ago. Came down very, very hard on Friday, all the way down to the 61% retracement of the low we made in January. It was spot on. Now, if you look at the little triangles that I have put into Tiger TV to take a look at them here, you'll see that there's a 20-day cycle that is there. In other words, from the high to the low that occurred in December, we're looking for this same pattern to repeat. And if it does do that, that means we're going to be coming down into late this week or early next week. And of course, you know, Monday is President's Day. The U.S. markets are closed. The rest of the world is open, but we're closed. And so we want to be watching gold, because gold hit a 61% retracement on Friday at that 1228 level. We bounced a little bit from that level, but I'd really like to see gold get down to about 1206, somewhere between 1200 and 1206 per ounce around next Friday. That would be an ideal place to take a look at it. Now, we've got a call from California. Rich, are you there?
Yes, I am.
What can I help you with, my friend?
Well, I am actually calling about gold and silver stocks. I have some March calls in SLW and sand that I am looking for an exit strategy for.
Well, if I'm correct here, and I'm not sure that I am, but gold and silver is actually a lot weaker than gold. But the key here for me, Rich, is that when you look at this, there's so much symmetry that's built in here that it's really, really important. Now, the ideal situation here is that the market just goes flat here for the whole week. In other words, does some backing and filling, goes up to 1245, back to 1231, that type of thing. And then when you come into this end of this cycle date, which will be the end of this week, if it's correct, you should start a move up. Now, that will be you got to the third week in March to work on your options, so that's what you'd be looking for. The problem is you have a decaying asset, so you've got to try to manage that the best way that you can. That's the problem with options. It's that time premium just absolutely eats you alive. But it works in your favor if there's an explosive move coming out of there. And if we can hold these levels for a few days, you could see that explosive move. We could get gold to above $1,400 an ounce without very much trouble at all. I believe this is really setting up for something bullish, in my opinion.
Oh, very good.
I don't know if I'm right or not, but it just looks that way. Looking at the charts, we've had, higher bottoms. Three reasons why I like it, and that is that the 61% retracement on the weekly was down around 1150 per ounce in gold, coming off of the 2009 lows, and the amount distance between the retracements, we had a 37% retracement in 2008, and we had a 37% retracement that lasts since 2012. So that lines up, and now on the dailies, you have all of these coming together here at the end of this week, and also on the 15th, which happens to be a Sunday, you have a new moon. So should be some real big fireworks here in gold and silver starting the week of President's Week. That's the way it looks like to me.
And you think that sets up for the miners as well?
I don't look at the miners that much, but I imagine it does because they follow, quite closely. The miners have been beaten up so badly that, you can't find anybody that even wants to walk by a gold mine, let alone buy one of them.
Well, thank you.
All right, my friend. Listen, thank you for calling in. We certainly appreciate it.
I appreciate your show. Thank you.
Okay, thank you, Rich. Okay, folks, live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.